Welcome everybody, Chris here. We usually do the daily overview, but I wanted to do the pro YouTube sentiment, and that's using ChatGPT to summarize videos. And I already went ahead and pulled from Your Dollar University. So this is on the fundamental side, and he's looked up and down about the U.S. Treasury already. And speaking about the yield inversion, I think we're like 80% inverted on the treasury yields. Like we could take a quick look here. Macro. Percent yield inversion, we're 81% of the yields are inverted. So basically what that means is that people are seeking safety. They're seeking safety and they're fleeing risk in terms of the treasury yields and the bonds. And so, pro YouTube sentiment, we're going to go through Eurodollar University. Wish I had some coffee this morning. But it says basically, he talks about the German curve, and they have bonds just as the US does. And he talked about how the CPI that was released in November, it made their bonds inverted and large and unprecedented. And then since then, the ECB has tried to respond, or it says the speaker notes the ECB recently raised its benchmark rates. That the German market is now showing that is thoroughly treasury, with nearly all the German government curve below the deposit floor rate. And he says that's surreal. I guess they didn't expect that happening at all. And the speaker also mentions that this type of inversion is usually associated with recession, indicates the market is expecting interest rates to decrease. He concludes by saying all these things are worth looking into deeply, not just taking people's word for it. So, because the economies of the world are in sync with each other, also like the indexes are somewhat in sync with each other. They look different, but for the most part, they're in sync with each other. Germany is like the big powerhouse of Europe, and if they do bad, we're definitely gonna do bad. And also the same with China. It's just with the two largest currencies, the euro and the U.S. dollar. If the euro is starting to fall apart, and people are fleeing for safety, and they are for the bonds, then it's definitely worth looking into. I agree with him on the fundamental side. Next, trading fraternity. So this guy, he looks for plays in companies, and he looks at some things like the CPI data. So let's see what he says. So it says the speaker in the video is discussing the stock market and the trends that have taken place for recent days. So this is last week. It looked positive in the morning, but then it broke the uptrend for January, which is somewhat true. I mean, the only uptrend that I see that got broke was this one. That's the one. And if we end up stopping here, then that's it. One point of interest I'm looking into is specifically, I guess, this one. Anything near the 0.75, and this level is close. And it makes sense for this kind of retest resumption to the downside. So I'll be keeping an eye on the 8-hour bars that go into this area. But back to the video. We got the CPI coming up, and that says that asset managers and funds are more neutral than they have ever been in the past decade. It's for the most part true. Institutions are they were bearishly biased. Now it's getting closer to neutral a little bit, and then which means that everybody is ready to invest in either the top or bottom of the markets. Speaker also mentions that new experimental data for the CPI puts the economy in negative territory. They mentioned that the bulls still have some control, but that the market is in chop, and they are waiting to see how the CPI data release on Tuesday will impact the market. They suggest that it would be powder keg of information, and that everyone should be prepared. So that's something interesting. This one is from FX Evolution, so they're really heavy on statistics, and those statistics informing us about the fundamental data. Speaker of the video discussing the recent developments in the stock market and speculating on potential reasons behind recent trends. Mentioned that a high number of retail traders getting involved in the markets may have led to a dump in prices, and all the people that believe in Jim Cramer. The speaker also mentions that Wall Street's share buyback programs and the high level of bullish sentiment among investors may be contributing to the market's bullish trend, but cautions that smart money and insiders are not buying at an extreme rate, and the market is likely neutral. They also discussed the state of the bond market, the impact of inflation numbers on the market. The speaker ultimately encourages caution, encourages viewers to think critically about their investments. So I like that one. He's neutral, urging caution, and saying like, hey, something's up. When there's smoke, there might be fire. That's what he's saying. All right, and then figuring out money. He likes to use different things and more technical based. Michael Silva, he mentions the NAA, a manager's exposure index, which measures the overall market exposure of the members who are surveyed. According to the index, bulls are getting too bullish, and he goes on discussing how the U.S. dollar 10-year yield, gold, silver, copper, oil volatility, the summation index, and the RSI, how they're performing on what they're indicating about the stock market. The speaker says that some indicators are starting to roll over, and the bulls may be too bullish, while some other indicators are consolidating. He mentions that these indicators are something that he'll be paying attention to in order to make an informed decision about the stock market. And then this is Vantage Point. It's an AI that basically tries to make a narrative about what's going on about the environment of assets to come up with a forecasted price. So the speaker, Greg, provides a stock market outlook for February 13th, 2023. So that's Monday. He starts by discussing the U.S. dollar index. He mentions the dollar has lost momentum after a non-farm payroll and is currently negative on the year. He advises caution in a potential bull trap in the dollar. The important level is 103.66 for a resistance point for the dollar. He then goes to discuss and mentions the S&P 500 is above the yearly open, and as long as it holds, then it's implying strength, and how that relates to the S&P 500. So we'll take a look at his claim, 103. So he's referring to this resistance point, 103.491. And I don't know what to think of it. I mean, we would like to retest in here. I mean, this is naked. It hasn't retested in there. We have retested here. That's why I guess that arrow is there. So we don't know. As far as we could say, these are the bulls, and as long as this keeps going up and it doesn't break, it's implying that the bulls are in control. If we start getting an orange box like this one, the hollow box up here, then we could see that, okay, both sides are duking it out again, because I mean this is kind of the bulls being wrong, and then now the bears are wrong. So we have to wait and see. If we look on a smaller time frame, it does look like it's trying to roll over, and it might. And I'm all for it. Like I want to trade long, but at the same time, like I want to be careful. I'm looking for a fill of the weekly fair value gap on the week on the S&P 500. Roughly this box, I would like it to go all the way up here, but at the same time we broke kind of this trend. So if we get a retest rejection, I'm expecting this to break through. It is at a point of indecision. I'll give you that. But with the euro in its condition, where it broke down on a high time frame, this is the 12 hour. Like this is a big deal, and I'm just looking for a retest in here, and maybe that will make the dollar retest down here, and then I expect a nice bounce off of that, and then a nice bounce off of the euro. And with the Japanese yen still kind of it hasn't broken down, I say risk off sentiment or risk off risk is still baked in the cake. And that's why things are uncertain. It's because this yen is powering up, and it could launch up. Like I think it's a good percentage number. This is the wrong chart to look at it from. This is the right chart to look at it from, and we want to move to the weekly. Yeah, it can launch all the way up here, so it's the Japanese yen could move like 6%, and that's pretty big. That's a huge risk-off move, and if Jim Cramer is so bullish, I'm gonna be bearish. Like that's it. VIX, we've broken out on the 12 hour. So as long as like we consolidate or keep on trending, as long as this 4 hour order block holds, maybe we can kind of consolidate here a little bit. I'm bullish for risk off, basically, and until we get some kind of break on the 4 hour or a break on the 12 hour, which there is no order block to break yet, then I'll be more bullish. But I'm like really cautious just because the euro's broken down. Euro strength is associated with risk on. The VIX is broken out of a 12-hour market structure break, and VIX is associated with fear in the market. And then Japanese yen is a safe haven currency. So is the dollar. The dollar has broken out of a 12-hour market structure break. The yen is holding above its order block, and if it doesn't break down, and if the dollar doesn't go down, then it's hard to argue for a risk-on kind of environment. On top of that, we got risk-on growth commodities going down. Lumber and then Dr. Copper or associated with growth and building is now on the downtrend. And the one that's kind of confusing is oil. I will say that. We are challenging the highs here, the bears, but we don't know what's really going to happen over here. We got a 4-hour market structure order block here. If this breaks, this is untested, so there's a big reason to come back. If this starts to go in line, oil, if it starts to go in line with the other commodities and break down to the downside, it's not good. I can tell you right now, if all the growth commodities go down, it's hard to believe that more growth is coming. Just saying. And then the same with the currencies, the safe haven currencies. If the safe haven currencies, specifically the yen and the US dollar, go up, and the euro, the risk-on currency, goes down, and the VIX goes up, it's hard to believe a risk-on narrative. So that's kind of just my point of view, and just kind of taking all of the YouTube Pro sentiment. I think we finished it. Taking all the YouTube Pro sentiment in taking what they say in summation, basically, is that, hey, things are very uncertain. Watch out, and there's a lot of people seeking safety, whether it's safe haven currencies, de-risking from a risk-on currency, or going into the VIX, or the VIX gaining strength. Of course, these are like for the most part, short-term moves, but they are saying something. They have a point, and it's substantial. Like, it's significant to where you can't be like, that's a little bit, or that's a deviation, or like an outlier. No, like, we're really, it's significant. So that's pretty much it. I have no idea what's going to happen. And I basically was pointing to what I'm looking for is basically a retest of this broken trend and then a rejection. And so for the short term, I kind of expect this where the dollar would come down to retest this area, and then the I have no the VIX coming down and consolidating here to the 4 hour order block, and I think that's and then the euro, who broke down, coming back to retest into this breaker, and we're gonna see if that retest comes in at the exact same time the dollar comes down and the VIX consolidates. It would spur a pump. We don't know how far, but that's as far as I can see. And I would like it to fill the weekly fair value gap, but we're not guaranteed. So that's kind of what I see. Thanks for watching. See you next video.